All right. Today is the 5th of January. Time is 10 a.m. PST. And I want to talk about just one real quick thing here, and it's about initiations. It's about initiation modals, which I call them, and their interaction with higher time frame and lower time frame mitigations. Okay? Very important lesson, really. It's just my understanding of all of this is deepening, and so it's worth putting together a record of it. So as we've come down here, this is the higher time frame look on my left hand side, and then on my right hand side I've got the 15-second drawings. And we're going to talk mostly about the 15 seconds, but or the 1 minute 15 seconds, just lower time frame, right? So let's just have a low look from our higher time frame perspective. What's going on? We've had a mitigation up here in a 15-minute initiation range, which doesn't, for me, qualify as being the mitigation that will hold and pull price down to break this low. All right, I would have much preferred it to be in a 4 hour block, one like here, or maybe even this one. And we've worked our way past both of them, and so now it makes me think, well, I'm not certain. I'm not sold on it. I'm not sold that this is the mitigation area right here. I would much prefer something, like I said, higher time frame. Now, if we just back out just a little bit, we can see that we had, let's go to a 4 hour chart. That'll help explain it. So this mitigation here, where it says daily SP MIDI, let's make that bold. Where's the bold there? Daily SP, daily sell primary. This is exactly where we expected price to mitigate and continue lower prices. And what's happened is we had a good mitigation and a pullback. Now, if we look at this mitigation here, daily SP MIDI, it's actually a shit mitigation. It's not a very good mitigation at all. And so I wasn't looking at at the time thinking that was a great MIDI and that we should launch lower prices. But yeah, it did it, and it created a daily initiation pattern that's pushed downwards. So we've got to kind of conclude that that was a good mitigation once it broke structure down here. You know, that you can't deny it. It has moved price down that far. The way in which prices move down, though, might move down in a way, could be sort of cause stacking. Also, as you see, as we move back down, it's very rare for us to get up into the third quarter, you know, into this kind of an area. It's usually you'd sort of hit the open like it did here and then push prices lower. So what's happened here is created the daily all down and then immediately come right back up into it. So it sort of shows weakness in my eyes. And that means two things. Number one, we can accept more of a mitigation in the green area, which is why I got the green area drawn on. But number two, what did this mitigate? The daily here. What the heck did this mitigate? And so if we look left, it was a transitional order block by primary, right? The last known object here was the buy primary. So this is to support the buying of prices, right? And so as prices move down, it's now coming to a point where we're seeing that it could actually start getting taken, this liquidity up here. Now, do I actually think that we are heading downwards if we are heading up in price? So I think that we're actually going to come and break structure and everything else up here. No, I don't. You see, we are actually in a higher time frame monthly. If we were to draw it on the monthly, we'd be able to see that we're in a monthly sell pattern. Okay. So with that being said, then, we could find it if we need to find the monthly, but it's a big monthly. It's a big monthly pull down. I've got it on a different chart, which is why I can't sort of see it just straight off. But big monthly pull down, and so these dailies, I'm not like looking for them to really hold based on what's happened. If we just get rid of all my drawings, this is that high, and look how we've worked our way all the way back. Now, yes, we've had a reaction, a pullback. What's likely to happen in a pullback like this? Well, a couple of things. Number one, we could just be pulling back into lower time frame liquidity with an expectation of yoinking up. Second expectation is that we could be taking lower time frame liquidity, so we could, higher time frame liquidity. So we could be coming back into the areas like this before yoinking up. But my anticipation is that we are going to break this area up here. That's my anticipation at this point based on price action. Now we can break down here as well, so there's also that option. But it just goes with, if we're following along in tension, we should actually expect this range to hold more than, say, this one. This one is a transitional order block, hence the dollar sign. And yes, we've got this green area. Yes, we've got a crappy daily mitigation. Yes, we've got this pull down with weakness where it's come straight back in. So we're seeing that it's likely that that high will get taken. The green zone won't hold because of what this mitigated in the first place. And the likelihood is it will be in this area here where we see the higher time frame mitigation, and then price will fall, breaking all of this, right? And so that will take what, years potentially. If this was 21, this is, I'm talking like 25, 26 maybe is the ultimate plan for all of that. That's just going to be whatever they decide to do and when they decide to do it. But overall, we're in a monthly sell. The US dollar overall in the next several years, I believe, will strengthen instead of weaken. Okay. So that being said, what have we done? We've just taken higher time frame liquidity on a 1 hour chart, just taken it, and we've stopped at a range. It's a MIDI. It's an H&L. It's definitely H&L because you could say that this big block here is the higher time frame, and any of these are the lower time frames. So let's just say this is the lower time frame here, right? We could say it's in the inside lower time frame. So there's our H&L, yes, but the initiation is the mitigation is just a regular range. Well, does that matter? Well, the first thing you want to look at is, was this in a liquidated state here? Yes, it was. Were we in a liquidated state here? Yes, we were. So what does that show us? It's a buy primary. And then were we in a liquidated state right at the top? Yes, we were, because of this high here that broke structure down here. So this is a beautiful looking initiation pattern, and that we could use to sort of yoink price lower in this very moment. Now, yes, I've already identified that, yeah, these highs are potentially weak. We should be looking for longs. But this is, as I just mentioned before, something to happen over the years. I don't know when this will happen. Months, weeks, days, who knows? Years, who knows? So right this very second, it looks to me like we're in a good situation for a stronger pull down. All right, so now let's jump to our lower time frames, because this is going to all start to pull together about what I've been talking about. All right. So we have this mitigation up here. This is that mitigation that's a regular range. Let me just show you again on the higher time frame. It was this one right here, this high over here, right? And it's up here on the 15-second chart. So crap range, but what happens afterwards is the most important thing. And so the first thing that happens is a very sketchy looking sell initiation with an H&L mitigation. So let me just sort of go through and explain that, and explain why I think this is actually a good trade now in hindsight. Okay, so what's happened is, yes, we're coming in to make a primary range. It's not the best primary range because all it is coming over liquidity here. So it's not the best, but it is what it is. And price is coming in, took the liquidity from above here first, pulled back, and then came up for more. Now, the reason it does this come back for more sort of situation, I believe, is because it hadn't done its initiation protocol just yet, which is the end formation to this sell primary. Okay, so that's really how it is. If we just pull this over like that, you can now see that the initiation ended the mitigation. It was the ending point to it. And then once it broke here, this became a very rock solid order block. Okay, so that's what's happened. And how would you have gotten in on this trade? Well, you would have wanted to wait for the last known buy range on this one, buy order block right here. You'd have wanted to wait for that to actually get taken, something like down here, and then your stop would have covered the high, right? So it's, what is it, 5 pips, 7 pips. So too rich for my blood, I wouldn't be in it. I don't want 7 pip stops, okay? So even though we're on a 15-second chart, it's just too big. The aggression, the movements in the market, they're just too big swings for me to get involved with this one. But I did see it. Now, how was I able to draw the initiation ranges? Well, and why is it sketchy? Right? Because I mentioned that. Well, first of all, it's a 3-part process. Part 1 is you start off in a liquidated state. Were we in a liquidated state? Well, liquidity was right here above this high, and so we were above that high. So yes, we're in a liquidated state. The second part to it is where we're in a second leg liquidation. So liquidation leg 1, yes. What about leg 2? Is it in a liquidated state? Well, yes, it was, because we had this range that broke structure over here. So there was liquidity down there. So yes, we've got check mark 1, check mark 2, and so the third check mark is going to be here. Were we in a liquidity grabbed state on our third leg? And the answer to that is subjective, because to say that there was liquidity planted above here, wouldn't we need a range, an initiation, and a break of structure? Well, yeah, we kind of do. And then if you look left, what have we sort of taken out? Very little. So it's very subjective on this one. We could come down to a 5-second chart to really look at it. And then you can sort of start to say, well, look, here was the structure that broken. And you can easily say that this range happened before this leg here. So what was this high here in a liquidated state? Yes, it was. There was money right here in this point. I would have preferred the money to have been here, though, right? And now you could also say, well, look, we had this little range here that broke structure down here. So it's subjective, right? Here was the structure, here was the range, here was the structure. So that does plant money right above that range right there, right? So that's the subjective part to it. So let's just clean up my drawings there and just sort of forget about that as a potential trade or as a potential anything. It was a good moment in time just to sort of see the turnaround. And I did watch it live, and I was very tempted to get an entry because I saw sort of what was happening. But that third leg really sort of held me off. Anyway, then we pulled down, and let's talk about what we're pulling down to, because I was thinking to myself, well, the longs don't look very strong. If we look on our longs, alongside all of this is just cause. You know, we had this big old, what is it? It was an event happened at 5:30, 5:28. What was it? 5:30, bang on the dot, boom. Some CPI nonsense, whatever bullshit that they decided to do, they did it right here, right? This is their manipulation event. So they took liquidity from the high, took it from the low, and then initiated high. So what does that do? It tricks people into thinking, guess where we're going, buddy boy? We're going up. And yet we're seeing signs that we're going down. All of this is showing us strength to support lower prices. So let me talk about that, which is the actual purpose of this video, right? So we talked about this initiation range at the top and how it ended with an H&L, a higher time frame, lower time frame mitigation. Let's talk about that real quick. Here's the higher time frame, here's the lower time frame. Okay. And then we pulled down and away. Well, this is really what confused me. We stopped here to a sell primary, transitional order block sell primary, which does what? They always stack cause. That's what it's about. That's what a transitional order block is. And then we came up to mitigate just a regular range. And I was thinking to myself, well, what are we doing here? We're not doing a primary range or anything like that. So we just got to let it go. And I draw my liquidity above it, thinking, well, they might be creating a liquidity stack, right? We might be coming in like this, coming in over the top to mitigate up here before we're going to pull down. But actually, this is the winning moment right here. If we look for, here it is, look for the liquidity, A to B, sell range, break of structure down here. And you just got to look for this shit, right? What does that do? That stacks money. Oops, sorry. That stacks money where? Right on the top. Break structure, and then it comes back in, and here's our higher time frame block, and here's our lower time frame block, and that's exactly where it stopped, right? Had a mitigation. So now we're in H&L. So all we're waiting for now is an initiation ending. We'll go to 5 seconds just to help us see it. So we had an initiation ending, meaning leg 1 right here was in a liquidated state, right? We came up over this range. Leg 2, liquidated state down here, right? Below this liquidity pool, I should say, right here. And then leg 3, back up and over into this area. And so we can kind of see, again, leg 3 is a skeptical one again. We've got this kind of range initiation, sort of somewhat skeptical break of structure. And it's like the leg 3 is really the one that's not pulling, making us love this trade. But it happened, the same exact thing happened again, right? So not only have we made a sell primary because we've gone over the top of this range, but we've ended with a 3-step initiation: liquidity grab, liquidity grab, liquidity grab, right? With an H&L mitigation. So what do? You wait for the most recent buy block to get taken out, which on this one would have actually been here, right? You pull it over and you put your entry right there. Right there. As soon as price breaks that block, you want in, right? And this would be a sell stop. Or it could have been a limit order. It doesn't really matter, but you put your stop at the bottom, covering that high. Boop. Cool. Got it. All the rest of it. Let's go back to like something higher time frames, just so I can show you the second one. And so as we're pulling away, we're looking for the same kind of stuff, right? Anytime we go over the top of liquidity, we've got to be thinking, we could be in a something higher time frame, right? Well, you've got to remember, as you break structure to the downside, what are you doing? You're creating primary ranges. Every single time we do it, we create a primary range, right? Every single one of these breaks of structure gives us a new primary range to play off of. Just take the best ones. Best looking ones are always the best ones that you'll be able to find out if you're new to this. There is something more to it where we're going to have to like start looking at did we get a 50% touch? But suffice to say, for right now, just know that the deep lows that you can see on your chart are the actual structural order blocks being created. Okay, so here we are. We've got this is our H. And you see this little bad boy in here. This could be our L, lower time frame, right? So we've now got an H and L right there. So what would we be looking for? Let's say we are looking for continuation shorts. What are we looking for? H and L, always. Higher time frame and lower time frame mitigation, right? Here was that order block that got created. Let's go on a lower time frame so we can all see it. Can you see why it was? Okay, so range here. Break of structure here. What does that do? Puts money where? Above it. Right? From this leg here, from this point here, all the way up to the top, took the liquidity and broke on itself, creating what? A sell primary. A sell primary range was created. And then price comes up and does this beautiful, beautiful event. And I'm going to take these out because I want to show you something here. This is how we defend ourselves in the market. This is how we prevent ourselves. Yes, we're at a primary range. Yes, I think this is the mitigation. Yes, I'm eager to get short in the market. Do I just go short just because it's an H and L? No. Do I go short just because it's H and L and breaks the last known buy range on this one? So let's say it becomes transitional, which it does. Let's watch it become transitional. Right there. So do we just enter now? Because it's ticked all the boxes, entering here. Stop there. No, we still don't, because we did not get the initiation ending. This was in a liquidated state. This was not in a liquidated state. Look at this leg one here. We can say that leg one here, this high right here, is in a liquidated state. Why? Because it went above and beyond this one. It didn't actually go above and beyond, but it matched it. And so in my studies, matching it, equal highs, is a liquidity grab. Okay? That's my understanding. You can understand it however you choose. Leg one was in a liquidated state. Leg two was not in a liquidated state. It didn't even go below this low. And leg three was in a liquidated state. So no initiation, but a damn good looking mitigation, right? So we like that one. So let's pull those drawings that we had on back. We can. Oh, I can't. Okay, never mind. Really doesn't matter because we'll put them in ourselves. We'll draw them on ourselves. Okay, so then we come up to here, right? And we go, well, we're still in an H and L situation. We've got that higher time frame and lower time frame. Remember, the higher time frame is this big block over here, and the lower time frame is this little one. So H and L ticks all the boxes as far as that's concerned. But have we ended in an initiation modal, right? Were we in a liquidated state here? Abso-fucking-lutely. Here was liquidity, here was liquidity. We're in absolutely liquidity grab state. What about this? Down here, were we in a liquidity grab state? Well, absolutely, because look at this range here. Was it from this high down to this low? Range initiation, and we could take this as structural break if we wanted to. Or we could use this as structure as well, even though it's at the exact same high. That's what kind of made this one a little bit trickier to spot. But you can say range initiation and just use that top one, break of structure. What does that do? It stacks money. Where does it stack it? Right at the bottom here. So we've got range initiation, break of structure. So we've got liquidity. Liquidity is right here. So a liquidity grab state, yes. Into another liquidity grab state, yes. That's made it by primary, hasn't it? It's It's gone over the top of a range that broke structure, so it's a buy primary. So now, what are we waiting for? A sell primary. Need a sell primary to initiate from here. So were we in a liquidity grab state on that second leg? Yes, we were. What about this third leg? Well, anything went over here, anything went over here is absolutely the third leg. Last thing you need to do is take out the last known order block, right? And here it was. Here was the last known buy order block because it went A to B just before they took the liquidity and did all of that, right? This becomes the transitional. Boop, just like that. And how would we enter? Wait for that transitional get taken. And you got two entry methods. Now, number one, I enter on a stop. I enter on a sell stop. I do this. I don't wait for the market to re-enter the zone. I'm in the market right this second. The moment price broke down through my level, my order was sat right here, right there. That's where my order was. Boom, taken in, beep, beep, you're in the trade. Whoop. Now it's up to you whether to set a limit at this point. You can do a limit order and have it sat here, waiting and praying for a touch. Boom, you got a touch, straight back in. So that's two methods of entering, and then just go for your 10R on this one. Just as long as you covered the high that ended in an initiation modal, that's all we really care about. And then let's watch it melt away. So what's going to happen now is we're going to melt away. Of course they can manipulate, of course they can do other things, but right now that's what we're looking for. Melt away, melt away. I didn't take either of these trades, nor there was one up here as well. There's three possible trades in the last 2 or 3 hours. Didn't take any of them, but I did see them live, and just good to sort of keep your mind sharp watching them. Didn't take them because I didn't like the legs. I didn't like the third legs that were being in a liquidated state. They were too low a time frame for me. They were like things that would take on a 1 second or a 5 second. And I didn't like that. I want something a little bit more high time frame. This high can totally be taken because it was just a regular range. We're not saying it's going to hold indefinitely, but it definitely does look to me from a higher time frame standpoint as if we've made a what do we call this? An initiation range on the higher time frames. That's really it. So let's see on a 5 minute, where's the last known buy range? Probably in here, isn't it? Might have to go for a 1 minute. I guess. Oh, it's tricky. I guess it's here. If it's not that one, then it's that one. If it's not or any of those, then it's this. So what's actually happening is we're just pulling through right now, working through those transitional order blocks. And so what would we expect? Probably a remitigation of those zones. It could be that we're going to come up to here, or it could be just hang around in here. You got to realize as well, we pushed through transitionals on this time frame. Okay, so we pushed up through all of this. See how price worked its way all the way through, and now it's working. It's potentially working all the way through it. So if price does just keep initiating through here, we will be coming back to this zone for a remitigation for sure before we pound down. When I say for sure, it will happen. It's just a matter of time. But they never leave things like this unmitigated. So we're just going to wait and watch. All right, guys, that's it today. No sort of trades that I actually took, but just following on some intention and showing you guys some higher time frame, lower time frame mitigations with an initiation ending. All right, peace out. Catch you on the next one. Hope you're living your best life. Take care of yourselves. Bye-bye.